So it's a great pleasure to start this session where we're going to talk about the structure of institutional crypto markets, what actors are there, how things are changing in the current market. And so I'm very pleased to, so I'm Ken Timsit. I'm the managing director of Cronos Chain. Cronos Chain is an EVM sidechain supported, amongst others, by Crypto.com. And so we have Eric Knight from Jane Street, Jonathan Chan from Wintermute, Rich Rosenblum from GSR, and Shawn from Crypto.com on the stage today. I'm going to ask them to introduce themselves, and then we'll get started. But so please, guys, take, I mean, the question here is who you are and what are your jobs, of course. But I think people are interested in understanding a little bit also like what your company does, how you position in the marketplace. So please take as much time as you want to explain like what your company does, since many of the members of the audience may not be familiar with how market makers and institutional investors work. So Eric, maybe you'd like to start? Yeah.
Sure. My name's Eric Knight. I work at Jane Street Capital. For those who haven't heard of Jane Street, we are a global liquidity provider. We trade all asset classes, stocks, futures, commodities, options. We've been strictly TradFi until the end of 2017 when we started our crypto desk. I'm one of the original members of the desk. We trade across exchanges. We trade futures. We trade options. We trade, we have a counterparty list we trade with directly. And I've been at Jane Street since 2001, and yeah, excited to be here.
Thank you. Jonathan.
Hi, my name is Jonathan Chan, and I am the Global Head of Business Development and Partnerships at Wintermute. For those who don't know who Wintermute is, we are a crypto-native, high-frequency trading firm that trades across over 60 venues on decentralized and centralized capacities. We have a robust OTC desk and heavy DeFi users as well. Wintermute trades all financial derivatives related to cryptos as well, so options, perps, futures, and spot as well. I just wanted to also take some time to address an incident that occurred, that occurred yesterday. Echoing what has been already made publicly, the incident involved a profanity hack that compromised one of our DeFi wallets. To be clear here, this was siloed to that smart contract, which was used exclusively for gas optimization for us to trade on chain. It did not affect our centralized trading venues or our internal trading systems. Wintermute still has a very strong financial operation, and we will continue to provide industry-leading services and products to all of our partners. As more information comes to light, our CEO and the rest of the Wintermute team will communicate with the rest of the public. And I don't want to take too much time with regards to this topic, as we have many other discussions planned. So, yeah, thank you very much.
Thank you, Jonathan.
Thanks,
Rich?
Rich Rosenblum, GSR. We got started in this space in 2013, and we are also a crypto-native high-frequency trading group. We're also an investor, market maker, and ecosystem partner. And I think one thing that differentiates GSR is that we're very client-focused as opposed to coming from traditional space and being more prop-oriented, very much looking to build long-term relationships, some that are in their 10th calendar year now, and really look to touch the space in a lot of ways possible and try to make a positive impact.
Thanks. And finally, Shawn.
Thanks, Ken. First and foremost, I just want to say class act, Jonathan. Thank you for that. I think the market needed to hear it, and that was some of the best news I've heard all day. So thank you. Shawn here. I oversee the execution services for Crypto.com. Historically, Crypto.com has been a retail exchange with about 50 million retail users to date. Prior to the sell-off, we were obviously run rating for about 75 to 100. And for context, Coinbase had about 91 in their 10K at the end of 2021. So we went parabolic over the last 12 months. But we're now institutionalizing ourselves. That's why I joined the firm about 4 months ago. And we're building out an entire institutional stack to service the institutional clientele. Looking forward to the discussion.
Thanks a lot. And I just want to take a minute to check that the sound is loud enough for everyone. Yeah, okay, because we can't hear ourselves. Great, thanks. All right, so for the first question, we'll start with you, Shawn. So here we're talking about primarily the world of custodial crypto exchanges. And so when all of us are trading on a crypto exchange, we know that there are market makers providing liquidity, but we don't really know like how the order book is built and what happens behind the scenes. So I'd be interested if you can take a few minutes to explain what happens behind the scenes when people trade on crypto exchanges and what are the roles of the actors that we have in the room, and then we'll ask them to add and comment as required.
Yeah, sure. So I think, maybe I can draw upon a couple parallel universes for those that just aren't familiar about kind of the market microstructure. But if we look at like cash equities, foreign exchange, or futures and or commodities, and even crypto, there's like a central technology that's used to match buyers and sellers. And that central technology, for all intents and purposes, is referred to as a central limit order book. And and we have that in crypto too, right? That's essentially how crypto works in terms of the exchange side of the business. It's a place to meet, match, and execute trades. It's really that simple. The challenge is getting people to come to your central limit order book, right? Like as I mentioned, we have 50 million retail users. How do you do that? Well, one, you build well, at least for us. I don't know about the other exchanges, but I'll tell you for Crypto.com, we built an application, very user friendly. It's in 50 million people's pockets. Make it nice and easy for them to buy and sell cryptocurrency. We spent a lot of money on marketing, as you're probably all well aware, right? Matt Damon and/or Jason Bourne is yes, he's not our spokesperson, but we partnered with him. We partnered with LeBron James. We did an amazing commercial, and then obviously we did a mic drop moment at the Staples Center. With all that said, right, that's a lot of money. So the marketing's there, the branding's there, but it's really the guys to my right those are the folks that actually end up bringing liquidity, price provisioning, and price stability, to the central limit order book that ultimately makes it a competitive destination. And that's, again, we partnered with, and I don't want to steal Rich's thunder, but we partnered with GSR early days, right? Early days. And he can expand on that. And, for firms like Wintermute and Jane Street, these guys have come to us in a different type of partnerships where, there's maker-taker relationships. And the bottom line is that that's the inner workings of the kind of the market microstructure and their roles. And yeah, I'd love to, I'll pass it over to Rich specifically, to opine on that.
Yeah, I guess I'd continue it to say that we're in a space that's very focused on decentralizing traditional finance and technology, but at the same time, still most of the heavy lifting, I think, gets done on centralized exchanges, and a lot of the services that we provision are on behalf of the centralized exchanges. And I think for the issuers, even the DeFi projects, groups that create DeFi projects and tokens, they're most excited to get listed on exchanges like Crypto.com. And I think that it's there's still aspirations to be increasingly on chain and to do things that are fully novel and decentralized. But I think that even if it's been a dozen years, it's still a lot of things that are similar to the way they were done in traditional finance. And I think that there's still novelties at play, like perpetual futures and things that are brand new despite having a centralized order book. And there's also DeFi venues that use centralized order book technologies. But yeah, I think the function that we serve is one as a core provider of liquidity for early stage projects as well as exchanges. There's that trinity existing between the three, since issuers want liquidity, they also want advice. And so the bridging between a group that's often facing retail in the tens of millions at the time versus a market maker, which is usually going to have more of hundreds of clients, we can do a lot more of that hand holding, make sure the tokens get to the right place at the right time so listings are successful. But it wouldn't be without the technology and all of that signaling to the market to bring in the right users from the exchange perspective.
Thank you. And so without getting into a beauty contest, I would be interested to hear you guys comment on how you see how you would describe the various segments of market makers or participants in institutional markets, and how you differentiate or position yourselves relative to that to others. So maybe Rich, if you'd like to start and expand on that, how GSR is positioned and tries to differentiate itself, and then we'll hear from the other two panelists as well.
Well, I'd say there's some sequencing over the last decade. If you look back, 5 years ago or more, there was a lot of different parties involved, the market making side, but I think they're basically split between groups that had focused on relationship and strategy, whether it's bringing capital or bringing in advice, help to get onto exchanges. There's other groups that are more focused on their trading technology and bridging liquidity, and there wasn't much in between. And I think that GSR existed as one of the groups that would kind of showcase both of those skills. I think that with the advent of much higher volumes and more participants the last few years, as well as derivatives, I think there's been more technicity that's been brought in, more capital needs, and some of the groups that were more just strategic and didn't have the technology have fallen on the way to the wayside. Now I think for the sort of top tier within the space, there's a lot of breadth and depth across them, and I think that it's more about how prop oriented and how technical versus groups that are more service oriented and tends to take more people management. The more clients you have and the bigger the team. So I think even if we have a large team that's capable on the prop side, we've tended to aim towards focusing on the client side and trying to build longer term, stickier relationships. I think that's one way we've stood out, as well as being in the space longer. I think we've added on things, OTC a few years ago, also have a regulated investment product, VC. It's a bit more diverse, but still trying to stick to ways where we could help that relationship side, especially where we see the most innovation, which is where the issuers lie.
Thank you, Rich. Jonathan?
Yeah, great explanation on that. So I think the differences between Wintermute and the other market makers up here is the fact that we are a fully algorithmic trading firm where click trading just doesn't exist at Wintermute. Everything's algorithmic, everything's automated from the traders and the developers at Wintermute. That being said, as I mentioned before, we are connected with so many different venues, whether that's on the centralized side or the decentralized side, that we can pull liquidity, pull pricing, so that we have really good execution for our partners. But on top of that, because Wintermute is connected to so many different venues, we can trade and put the price back in line across certain assets very well, right? And touching base on liquidity and market making for Wintermute, sorry, blanking out for a second there. I'm just gonna defer to Eric really quick. Sorry about that. Yeah.
Okay. So I guess the way we differentiate ourselves, I'll give it just a short bit of history. With Jane Street, we started the crypto desk at the end of 2017, right when I think it was the SIBO futures were listed. And so, we started the desk for two reasons. One, we saw a lot of arbitrage between exchanges. So we're like, all right, there's an opportunity there immediately. And the other one was, hey, there are going to be tons of US listed securities, whether it's futures or a spot ETF, coming imminently. And the spot ETF hasn't really happened yet. But that being said, it's almost a blessing in disguise because we built out our entire crypto network, our network of counterparties, kind of built this whole crypto kind of just business. And now as things are getting closer to the scenario we envisioned initially, I kind of see ourselves as not necessarily the bridge, but a bridge between traditional finance and crypto, whether it's traditional type products that are crypto based, or the experience with prime brokerage type services and capital efficiency and managing just very large networks algorithmically. Again, that's the similarity between all of us, is managing these giant networks of pricing, execution, managing inventory, capital, all those things. But I see us having a bit of a distinction in one way, because it's not only influenced by traditional finance, but also we can offset traditional financial positions, we're just more active in those books, so we kind of have a wider reach in some ways, while others, just in the traditional finance way.
Thank you. So, if we try to address the topic of this session, which is about the evolution of the market structure, So one of the trends that you've already commented on is heavy investments in technology and the increase in automation. I'm curious to know, with in the current bear market, if there are other evolutions in market structure that we've seen, more concentration, others. Maybe Shawn, you'd like to start?
Yeah, sure. I think during this kind of bear market, or what I like to call, given my TradFi background, this is a proper secular sell-off. Like we're going to be in this for a little bit, so buckle up, everybody. But with that said, I think what we're focusing on is really trying to, create an experience for an institutional user that, to use a crypto buzzword, we're trying to create a frictionless environment for when you come to a single counterparty and have a whole bundled solution, or a bundled stack, I should say, that just makes it easier. Because for those that are in the audience that haven't been in crypto, or think you're on the edge of getting into crypto and you dipped your toe into crypto, it's actually very laborious coming into to crypto and trying to, not crypto.com, but coming into digital assets, because it is so fundamentally different than the traditional space. There's there's no prime brokerage. There's no the credit counterparty worthiness it goes up in your throat after every trade, right? Like you're concerned, and these concerns do not exist in cash equities. They do not exist in foreign exchange. I don't think anybody's ever reneged on an ISDA before, right? So I think the evolutions are going to, and I know this is probably another subject, but it really is going to come down to stability, security, bundled solutions. You don't want to have to connect to 17 people per se. You connect to a handful, right? Counterparties, trusted counterparties, right? Have trusted OTC counterparties. Build your Sorry, I talk with my hands. You build your ecosystem, and then create your own efficient network. I think that's the evolution, is getting to a place where, frankly, is seamless, because it's not seamless, and I'm not trying to scare people away from getting in from TradFi into crypto, but it's anything but seamless. But yeah, I digress.
Thank you. In no particular order, I'm curious if any of you would like to further comment on changes in market structure that we're currently seeing in the market.
Yeah, I could start off. Yeah, completely agree with you, Shawn, with regards to that. There is no prime broker that exists in crypto like in TradFi, right? Crypto is extremely fragmented because there are arbitrage opportunities across centralized exchanges, across different currencies, across decentralized exchanges as well. But in traditional finance, the arbitrage just doesn't exist to an extent, right? There's NBBO, National Best Bid Offer, right? You just have the best price and you trade it there. But that doesn't exist in crypto. To an extent, that's why I feel like our jobs as market makers, as liquidity providers, are extremely important. Not just Wintermute, but Jane Street and GSR as well, and the likes as well. Because we provide that liquidity, we put that price back in line so that users, organic users and takers, can enter the market and have a full and good user experience. So 100% agree with you with regards to the prime broker model. Until that really exists, which it doesn't at this point, many are trying to do that, but it's extremely, as we can tell, extremely capital intensive. It takes an overhaul of resources to develop this technology, and until that day is reached, it's still a work in progress for everyone, I think.
Thank you. Other comments?
Yeah, I'd say one, I don't know if it's a change, thing that's going to remain consistent is an increase in derivatives and derivative volumes with respect to linear volumes, and as opposed to it being that you just look at traditional space and think that the volumes are low on a relative basis of derivatives to spot credit traditional space. I think there's some other factors in that. While in a few years, I'd hope it's a space that's driven by adoption that's not as much speculation or trading oriented, but so far, life to date in the space, a lot of these volumes are more speculative rather than being adoption. So people, whether chasing the yield or returns, 2017 it was just the token performance. You had the DeFi summer. It's more about chasing yield from the governance tokens. You had last year was NFTs. I think as some of these other things dry up and it's been a more stagnant market, I think there's going to be more focus on options and just being able to sell calls as a way to create yield. That's been there, but it wasn't as interesting if you're able to get high double-digit returns off of DeFi or of NFTs. So I think there's now better infrastructure for options and better understanding, more focus on the credit dynamics, and so if somebody doesn't have as strong of a view on what the forward is going to look like, and they're waiting, there's also a rising interest rate environment, so they're probably going to want to create other ways to have a yield, but be resident to just lend their crypto out. There's less providers for borrowing and lending, so I think options are emerging as another way to get an additional yield in the space, and it's going to be impacting the market structure since we'll continue to see those volumes grow.
Interesting.
Yeah, I'd like to add to, I think as well that there is just increased competition among liquidity providers. I think during recent drawdowns, prices went down a fair amount, but markets were generally orderly. I think there weren't massive liquidations like there were liquidations, but there wasn't the volatility. It was fairly orderly from a standpoint as compared to something like 2018 when, there were things that, you look at the BitMEX price, massive liquidations, a lot of people kind of complaining about it, and not without reason, I think. Liquidation engines probably weren't as good as they are now. But with the increased, I'd say, competition among firms like ours, as well as other entrants like, there's like macro funds, hedge funds, all these, it should have a dampening effect on, price moves. I think you won't see markets get completely crazy because there is that profit motive to trade against it if something is out of line, if something is not at a price where it should be. So, I think overall that's just good for the markets and good for bringing not just institutional players into it, but just kind of faith in the market prices in general, whether it's like crypto.com or wherever you kind of source your crypto.
Great. You wanted to add something?
Yeah, I just wanted to add in terms of like the competitive landscape and how that's going to evolve. And I kind of, from my perch, the way I look at like market making, it's kind of almost there's really two models, right? There's a market maker that's out there that's providing either a one-way or a two-way price as a service, as a sell-side service. And to Rich's point, and the rest of these guys, they have teams that will reach out to you and say, hey, how do I improve my market share? How do I improve my ranking? What do you need? Can we go out for coffee so I can learn about your business to actually improve my market share, improve the relationship? That's actually far and few what these guys do. The vast majority of market makers, because everybody, here's the two things that you could take away. Everyone's a market maker and everyone's a prime broker, and they're very few of both. Okay, I just want to throw that out there. When I say market maker, on the other, not these guys necessarily. But a lot of folks will call themselves market makers, and all they're really doing is kind of what Eric was saying. It's like early days, hey, there's a lot of ARB here. So let's just place passive orders on these various exchanges, and then we'll play the basis trade, and we'll place, the platform arbitrage, latency arbitrage, et cetera. And I'm a market maker now, and everybody's a market maker. The reality of it is to Eric's point, and this is what I'll close on, is that proper sell-side, two-way, 20 up, 20 down are coming. And that will increase the competition. It will decrease price, and it will make it a better end. An end state for the institutions that come in. And the concepts like Jonathan mentioned, MBBO, best execution. Again, everyone provides best execution. 90% of people don't even know what it means. It's a law in some asset classes. It's a code in others. In crypto, it's just a topic that people throw around. But I firmly believe that best execution will be here. It will come along with these competitive forces and these folks coming in. And I'm looking forward to it because it helps the community, it helps the ecosystem. So, yeah, that's all. I get excited about this stuff. Sorry, Ken.
Great, thanks a lot. So I'm curious, how do you guys see the landscape when it comes to TradFi market makers entering crypto? Are we there yet? Are we seeing signs of that migration? Who's making the moves? And how do you see yourselves competing if very large players from the world of TradFi are starting to encroach on your business? Whoever would like to start? Yeah, Jonathan?
Yeah, no, that's a really good question. And GSR, Wintermute, Crypto Native, Jane Street, TradFi, it's completely fine. I think it's, as echoing Eric's comments prior, it's extremely healthy for the marketplace, right? Having an orderly order book, a deep order book, so that participants can enter and exit their trade with confidence that what they see on the screen is extremely important, right? So as more traditional market makers, high frequency traders, et cetera, come into the landscape, again, my feeling is it's healthy for the crypto markets, right? To an extent, in traditional markets, that's already the case, right? Volatility is mitigated because there's so many players, there's so many market makers there. In crypto, again, it's so disfragmented relative to centralized venues and decentralized venues that more players, more market makers in the game make the landscape much more healthy. And as the evolution of crypto markets evolve, we're definitely seeing that come into play already, right? In 2021, massive bull markets, and to an extent, many high-frequency trading firms in the traditional space saw and lost out on a lot of money there, right? So they're definitely in the space now in 2022. Less liquidity, sure, because organic takers, retail has really been burnt recently. But that being said, market makers in the traditional space, we have noticed, have definitely come into the place. And to an extent, tighter spreads, et cetera, better for the market.
So it benefits the market, and how do you see then the crypto-native players continuing to differentiate?
Yeah, so specifically for Wintermute, we're in this cycle, we're definitely build mode. I know many people have heard that a trillion times right now in the bear markets, just build. But to an extent, we're always building, right? But we're just building more to an extent right now to compete with the likes of the traditional market makers coming into the place, right? And it tests us, but that's always a good thing. That's always healthy for the markets, right? So improving our technology, being more automated with our trading, being more intelligent with our trading as well. Because at Wintermute specifically, we operate in a market neutral capacity. We're not taking positions, right? We are providing the bid-ask offer, and we react when someone takes from that across all the venues that we trade with. And we just got to get smarter, and we're definitely working on that.
Thanks. Rich, you'd like to continue?
Yeah, I'd say as the space grows, eventually I think it's going to be pervasive. You're going to have the big name banks, big name funds, traders all in. But I think for the past decade, what we've seen is more of a lot of false starts. I don't think that's because people have low integrity or they're trying to spoof the market with their entries. It's more that if you have a 10 trillion size market, everyone's going to be involved. If you have a 100 billion size market, none of the big names are going to be involved. So this market has the ability to move so quickly. It would seem like if it was continuing to rally at this pace, it would be at 5 or 10 trillion, so they kind of all have to be in. But then when it retraces and drops instead of rallies, then they kind of stay out. And bringing up Goldman Sachs, having been there for 11 years in a former career, as a company people like to do business with generally, could say good things or bad things, but like to trade with Goldman and could trust them, like to talk to them, get opinions. Thinking about the past 5 years in crypto, Goldman's had a big part in crypto, a lot of opinions on crypto, some different investments, but really hasn't done much of anything. And they're always at the conferences here, they're always talking to the players in the industry. But I think if you're a crypto native group and you've built something in crypto, you're not really thinking you're going to go to Goldman and get much of anything. You might get a lot of talk, you might get promises in the future. Well, these big institutions, they move so slow to the point where kind of assuming that the base case is they're not really doing much. So I think if you look at the promises from 2 years ago and what's come about today, and you look at what people are saying they're going to do today and what's going to happen in 2 years, it's hard to be that optimistic on how much things are going to change because there's been such a lot of activity over the past 5 years.
Thank you. And Eric, I don't know if you have anything to add. You have one leg on each side of the barrier, I guess, and you can see what are the strengths and limitations of each type of player. Maybe you'd like to comment as well.
Yeah, I wasn't sure if the question was really for me since we're kind of like the TradFi firm that's already in, but I don't know. I guess what I can talk about is, well, I see a lot of notes that we have from our TradFi clients. A lot of them are talking about trading ETFs, trading, commodities, other things like that we currently trade with them. And in all the notes, a lot of them are like, but we're also asking about crypto. And it's just really hard to take, with a grain of salt, or we have to take it with a bit of a grain of salt because you just see a lot more of them when prices are high. And similar, what he said before is when the price is high, kind of like the pot is bigger, more people are interested, you're gonna hear more kind of talk about it. That being said, even recently, with the prices moving down, I'm still seeing kind of like a higher frequency with notes. But again, like I said, take it with a grain of salt. A lot of these firms move pretty slow in terms of allocating assets to crypto, in terms of really getting buy-in. They need a lot more buy-in from wider ranges of people within their institutions. So we'll see. That's not necessarily from a market-making point of view, but just from, more and newer participants.
Okay, great, thanks. All right, so we've talked about the evolutions quite a bit already. But then, if we look ahead at 2023, I'd be curious if you could share with the audience what you see as your top 3 priorities in terms of business, the things that you're doing to try and move the needle and prepare for, we hope, the next bull market. Eric, would you like to start?
Sure. So on this front, it's probably very different than their answer. On this front, it's probably just do more with DeFi. So we've got kind of the TradFi side ready. We're ready if there's more spot ETFs or all that stuff. It's really kind of, I do see a future where there is traditional crypto and traditional markets, but I also think that the amount of things tradable in DeFi is just going to explode. The amount of things you can do on DeFi is going to explode. And so if we're not prepared for that, to be able to provide liquidity, and at least that's where a lot of activity is going to be. So we kind of have to be there. And so we're probably, or I'd say definitely behind, in DeFi relative to some of the other panelists here. For me and for our firm, that's an area where we have to grow.
Jonathan?
Yeah, a couple things from Wintermute's side, I guess. I did mention getting more intelligent, getting faster, etc. Especially because these traditional high-frequency trading firms are entering the space. So that's definitely one. Part 2 for Wintermute as well is to increase the presence in the OTC capacity as well, whether that's trading with Wintermute via our platform node or in our API or through chat in large block sizes as well. And third, yes, I want to echo with DeFi as well, right? Already Wintermute's quite heavy on the DeFi as a trading perspective, but also as a user. But I guess integrating with more chains, more protocols, and just effectively helping the ecosystem out and promoting that space, because that's the ethos of Wintermute, I guess, is also a major goal for Wintermute as well.
Thank you. Rich, you talked about derivatives already, so I guess that's one of your top 3 priorities. But yeah, I'm curious if you could elaborate a bit more on those priorities for next year.
Sure, I'd say from GSR's perspective, somewhat of a shift from focus on mostly robustness to a bit of performance, both in terms of our trading and trading technology, and also our interactions with our clients. I think throughout volatile bull markets, it's about being able to service 300 clients instead of 30 clients, and being able to be on a new exchange once every 2 weeks and have the integrations go properly, and be able to be on dozens of exchanges without having outages, and increasing our time, our uptime. But I think as it's been a bit more of a stasis, and I think this period likely persists for at least another 6 months to a year. It gives us the ability to more improve the performance, and once the uptime is near 100, then it's about what you're doing when you're on chain or on the order books, and improving that performance. Same way with interactions with clients, as opposed to making sure the trading reports get delivered. We're able to more harmonize them and produce more results, and be able to improve upon and customize what we can deliver to our clients.
Okay, so strong focus on building through the bear market. Shawn, what are the top 3 priorities for Crypto.com next year?
Yeah, so I mean, aside from completing that 100 million run rate that I discussed at the top of the call, or the top of the day here, yes, of course we want to 2 to 3x our retail base over the next 12 months. But my task, and I was brought to the firm to help build out the institutional stack. So we just launched our OTC offering for block trades on 15 pairs, and we actually have 390 pairs and 240 tokens that we can make block orders on. So anything that we have on our exchange, we can make an OTC, Telegram, chat. So we just launched that, so that's spot blocks. We will roll out futures blocks, perp blocks, and crypto derivatives, so options and structured products. We have an entire team that's super pumped and excited to roll that out, and they're chomping at the bit for the risk, and looking forward to kind of launching that. And that's just on the OTC side. And then I guess in sum, what we really want to do is, again, be kind of the Amazon, right? I mean, that's the nirvana here. That's the trend in almost every industry, right? You want to create a seamless environment. You want to have a diversity of product and service. You want to have quality of service. You want to be on demand. You want to be up 24/7. We haven't gone down in 2 years, by the way. So, well, if we run rate this year, we didn't go down in 2021, and we didn't go down in the first 9 months of the year. And coming from my previous firm, we routed out over $1 billion a month, $1.5 billion, even I think topped out at $3 billion over a month. That's at all the exchanges, and they go down all the time. So we're the youngest on the block. We're the new kid on the block. We've got the best tech. We've got the fastest tech. And it's basically just to let people know what we do, because a lot of folks don't know who we are, other than commercials I mentioned. So thank you.
Thank you. They certainly do now. So I have more questions, but I don't know if we can take questions from the audience. I don't know what, is there a process? I guess if you have questions, please raise your hand and we'll just pass you a microphone. Oh, thanks, Reed. Any questions? Yeah.
Hi guys, I'm currently a student studying CS and math, and I was wondering, in market making world, even in crypto and TradFi, like what's like one, problem that, or say like an issue that you guys are like trying to figure out, but you haven't figured out yet, and you're looking for a solution. Like, is there like a problem, or like, I guess like for crypto, for example, right? Like volatility is high compared to TradFi, and like, are there unique problems that arise from the way crypto markets are shaped?
So yeah, so the question was, what are your unsolved problems at the moment? I guess that is from the perspective of someone who's a developer who's trying to serve your industry and understanding what are your most acute needs that you haven't figured out yet.
I can start with that. So crypto is still a new industry, right? We're still, and a lot of the technology is untested. So one of the major issues that I think all crypto firms, all trading firms, all DeFi users encounter is the fact of security, to an extent. And until the industry matures, and until there are more firms that get into the space and test it out and be trailblazers to really promote it, that won't mature yet, right? That won't gain mass adoption yet. But hopefully, we'll get there soon. And as others join in with a ride, we see that space really growing and really adding value to real-world use cases, specifically transitioning from TradFi to crypto.
I'd say well, security, again, that's probably number one across the board. It's like most important thing. But from a more just trading aspect, I'd say it's managing inventory. So crypto markets, it's not like stocks where you can't just borrow shit. To provide liquidity, you can't just borrow shares, short them, and then when you close your position, you buy it back. You need to kind of like have inventory. So having inventory, managing inventory, that's kind of like, I'd say one of the more challenging aspects of being a market maker in crypto. For a while, that wasn't a problem when there was lots of lending and borrowing in the market, but over the recent few months, that's I wouldn't say dried up, but there's been a pullback, which I think is totally warranted. It's just made the challenge of making markets a lot more. You have to deal with this inventory issue. And it's hard.
Yeah, just to touch base on what Eric was saying, inventory issue. So lending and borrowing for majors, ETH, BTC, the top 10, top 20, is quite simple to do, right? But I don't know how many crypto assets there are, thousands, right? So to provide liquidity and to trade those tail end assets, if you can't borrow them, it's extremely difficult. So echoing with your points and pain points with inventory management specifically for those altcoins. Yeah.
Thank you. Let's take another question. Yeah.
My question is about central limit order book structure versus like an automated market maker. I don't really understand it, but questioning it from a Solana perspective, I don't understand why that might be an interesting like innovation. If anybody can share kind of information there.
You're asking what is an innovation?
I'm interested in Solana and trying to understand why the central limit order book idea that they seem to have is an important thing on like on chain. I'm just curious if like people can talk to that.
Yeah, I could touch base on that. So you're specifically talking about Solana, right?
Yeah, that's where I've heard
Yep.
of the idea.
Yeah, Serum. So specifically, Solana, compared to other central limit order books on Ethereum or other L1s that just are very expensive for gas, Solana theoretically is not expensive for gas, right? Your transactions, your orders that you input there are inexpensive, right? And why does Serum, why does Solana, why do other protocols want to use a central limit order book relative to an AMM, right? Which is quite prevalent in DeFi as well. My guess is it's just comfortable with users, right? That is existent in traditional finance, that is existent in centralized exchanges in traditional finance, right? So it is a dip your toes in the water and test DeFi out, trading in a central limit order book first. And then as you get a little bit more comfortable, I think users transition to the AMM model or they don't, right? But that is one reason I think that many users start with a cloud relative to the AMM when they transition to DeFi.
Anything to add? So we have Miss in the back first, and then.
Yeah, so thank you. I have a question more about how some of the companies and entities that you're dealing with are more familiar with traditional finance and how you're distinguishing, not crypto native companies into this new world. So in background, I work a lot with corporations and entities from a legal perspective and trying to explain to them if they're interested in this new financial model, how do they need to react to the changes and what do they need to prepare for in order to engage in it?
Investor question, and you want to take it, Shawn?
Yeah, could you repeat the question?
So if to repeat the question is about like traditional investors and how they need to prepare themselves to enter crypto markets, right?
Yeah, Shawn, you had mentioned that this is fundamentally different than traditional finance, and from your background in traditional finance, you're bringing all these people kind of into the crypto world. How do you typically do that?
Yeah, well, that's a loaded question, but I think I can touch on a couple points to maybe address it. I mean, Rich brought up a great point earlier. I mean, if we're talking about Vanguard, BlackRock, Franklin Templeton, PIMCO, State Street Global Advisors, I mean, you name them. You're talking about those folks getting involved. They can't get involved to the extent that they would get involved in other asset classes as a part of their actual portfolio construction because the market cap is just too thin. So over time, it will mature and they will come and they're dabbling. They're indirectly dabbling and getting involved passively through VC investments and through the ETPs and grayscales and things like that. They're getting involved, which is exciting. But I think what I like to talk to the institutions about, particularly on the asset manager front or the global macro front, is that you kind of have to almost brace yourself because there is no prime brokers sitting in the center, right? There are very few members of ISDA in crypto. We just happen to be one of them, just to shameless shill here. But they're very, and ISDAs are being used over the last few, I'd say the last 18 months, maybe the last 2 years, which is fantastic because it gives some type of governance around credit counterparty worthiness and around the trades that you're ultimately interacting with people on a bilateral basis. So it's just, you have to be aware of the current market structure and where it is today, right? It's not there yet. But there are firms that are solving for their settlement solutions, clearing solutions, creating atomic swaps and making that credit counterparty worthiness, mitigating that risk by technologically solving for it, right? So there are a lot of the custodial partners out there now, or the custodial natives. They're creating settlement networks, right? They're creating off-chain settlement networks. So what that means is for an institution is they could literally just go and have one custodial relationship and have access to everybody on the panel, and their funds never have to move. And I'm not selling that because I don't work for a custodial native per se, but that's a good concept that will help the evolution of the market. There are firms like Hidden Road. Again, I don't work for them, and we're not investors in them. But Falcon X, these folks are trying to solve for the prime brokerage solution, and that will ultimately help when you start to reduce. It sounds like concentration risk, but you need a handful of prime brokers in the industry to come forward and a handful of settlement networks and clearing solutions, right? On-chain, off-chain, DeFi, CeFi. When that starts to happen, people will get more comfortable.
Rich, you wanted to add something or no? Okay. Yeah, Jonathan?
Very high level, just given the name of this panel, evolution of crypto market structure and liquidity. My thoughts is, as the large asset managers and traditional asset managers come into the game, they want deep liquidity, right? If they're going to add $2 billion on their balance sheet into their portfolio, they don't want price execution slippage of 3%, or something worse or a little bit better, right? And that's to the point why market makers and deep liquidity is so important. So until that matures, and we are seeing that maturing as we speak, as the markets have been less volatile in this year, we need that as well for institutional adoption to occur.
Thanks. Yeah, we need to stop? Oh, one more question. So I think, sir, you were next in line. The microphone is coming.
Thanks for the panel, guys. My name is Omid. My question is about execution. You spoke about central limit order book execution. You've also spoken about OTC execution. Be good to see where you see the market going forward. I'm from FX, where a lot of market started off on the central limit order book, but was pushed across into OTC bank trading with buy side. How do you see the crypto market evolving going forward?
So the question was, so FX markets saw a transition from central order book execution to OTC execution. Are we seeing the same? Who would like to start?
Sure, I'll start. I think people have differing views on this, whether crypto is going to end up being more like FX, like you said, where there's just a bunch of bilateral trades going on. I don't know. I think there will be some centralization across, sexes. I think, having a network of, having, I don't know how many centralized exchanges there are now, 30, 40 more. I think there's going to be some consolidation. That being said, I think there are, among trusted counterparties and large institutions of roughly similar size, that'll be another pathway for them. But I do think there will be some consolidation among, exchanges.
I just want to say, I think that the concept of best execution, the concept of execution quality, the concept of price improvement, right? These concepts do not exist in crypto. These guys all know it. They can prove it through their data, but the vast majority don't even value it. The participants don't even value it yet. I was on a soapbox for 2 years when I came into crypto talking about best execution, transaction cost analysis. People thought TCA was a token, okay? They did. It's crazy. So it's all coming. It's going to happen. I think it's going to be a hybrid. It's going to be very similar to the cash equity market structure in foreign exchange, but hopefully better than both. That's the evolution. Thank you.
Yeah, I think we'll see a lot more native algos go on exchange. I think in a market that's rapidly going up, you don't need as many triggers to pull, especially as a retail user. Just the buy it now price works if you think the asset's going to multiply in the ensuing months. But as there's more advanced users and it's not as clear what the price direction is, you're going to need more ways to to hide how much you're showing in the order book using a pyramid, or buy slowly using a native algo that's more of a time slice or a VWAP. So I think we're already seeing a bit more of that. But as opposed to it being that crypto is deficient or less sophisticated than TradFi, this is a different puzzle that's being solved. If you're an exchange with tens of millions of retail customers, you really just want people to be able to deposit, withdraw, execute seamlessly, which is a bit different than if you're, say, a CME. They might only have thousands of customers, and so they have less people plugging in at any one point in time. So it's a lot less work to do to service each individual customer. So I think that these large retail institutions, they do have a whole lot of heavy lifting. I remember at one point a year ago, it's like 10,000 orders to buy less than $10 of Dogecoin within the same second, all coming in at once. That's something that you would never face at the CME or NASDAQ.
All right.
Yeah, just to touch base on OTC, from our estimates, the OTC volumes are very, very small compared to the overall spot volumes across venues, right? But that being said, it's because the lady back there, truly institutions aren't in the game yet, right? Where generally in FX markets for OTC, there are large institutions that do large block sizes, right? And although that does occur at the moment, it's definitely not into mass adoption yet. It's not a vast majority of the volumes that are traded in crypto.
Interesting. All right, so we're reaching the end of this session. My apologies to those who couldn't ask questions, and my thanks to everyone for staying over time. Thanks to the panelists as well.